This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Healthy hiring. Private companies added more jobs than expected last month, but will low-skilled workers be the ones to power economic growth?
Lower for longer. With oil near $40 a barrel, energy companies are dealing with some familiar challenges.
Listening in, why some very big companies monitor closely what you post on social media. Those stories and more tonight on Nightly Business Report for Wednesday, August 3rd.
Good evening, everyone. I'm Sharon Epperson, in tonight for Sue Herrera.
And I'm Tyler Matheson. Welcome, everybody. Well, the Dow snaps its 7-day losing streak. We got more on that in just a moment. But we begin tonight at the intersection of Wall Street and Main Street. That would be the job market, which has been one of the most vibrant parts, the most successful parts of the economy. Today, we learned that private firms across the country continued to create jobs at a quite healthy pace. The payroll processing firm ADP reports that private sector employers added 179,000 jobs last month, and that was better than expected. The services sector, ranging from retailers to shippers and small businesses, led the gains. This report, of course, comes ahead of the government employment report that comes out Friday. It shows that many businesses continue to hire despite relatively sluggish economic growth.
Meanwhile, a fascinating article in the Wall Street Journal this week says that low-skilled workers, the ones who are disappearing from the workforce because of globalization and technology, could actually be the key to saving the U.S. economy. The article cites new research from a Harvard economist who anticipates a boom, yes, a boom in low-skilled jobs. Let's turn now to William Lee, head of North America Economics at Citi, to talk more about jobs and the economy. And Bill, thanks for joining us. This study from Harvard says that low-skilled workers will actually rekindle economic growth to the tune of nearly 2.5% a year until 2024. Do you agree with that?
I think that's pretty optimistic, but the key to the success of that project is how software is designed. If software and technology is designed so that people become complementary instead of being substitutes, instead of computers replacing people, computers use more people, that's really the key to the future growth, and that's what the study's about.
Yeah, how does this happen? How do these low-skilled workers come back into the economy in jobs that pay reasonable wages and, as you say, take advantage of technology if they are low-skilled workers?
The key to a low-skilled worker is that the clients out there, some of them really don't want to talk to computers. They want to talk to people. So if you have a low-skilled worker, but you put them in front of a really smart terminal, and someone says, I want a trip to Fiji, and that terminal is able to tell that low-skilled worker, here are the alternate routes, here are the different prices, and this is what the choices are. A human interface with a client could actually enhance productivity because the client is going to be very satisfied with the result and have a great experience. And at the same time, that low-skilled worker is able to do something very productive. So it really depends upon the skill that you give the worker through your technology design, and that's the challenge for the future.
We're specifically, though, talking about service-related jobs, the service sector here. Will it work in other industries as well, or is it really just the service economy?
Just look how productive the industrial worker is today. Yes, the industrial worker is going to have to learn some skills about how to operate these very complex machines. But once they do, and that depends upon the training the firms give, once they do, they become incredibly productive. So you don't need a college degree to be very productive in today's auto plants. What you need are the skills that the auto plants can teach you. And so what we have in the future then is the challenge of being able to give people embedded skills that are relevant for the jobs that are in hand.
The article in the Wall Street Journal ends with a very interesting quote from the Harvard economist who was the lead writer on this study that we're referring to, Dale Jorgensen. And he says there's quite a lot of evidence that the economy is growing faster than we think. We've been talking about this for some time as to whether the government numbers actually accurately measure economic growth. Do you think they do? Do you think the economy may, in fact, be growing faster than we're measuring?
There's an enormous amount of mismeasurement out there, so there's no doubt there is much more output than, for example, we now take for granted telecom, right? We can have video calls from anywhere around the world. Are we paying for that? No, a lot of these services and apps are free. So that stuff is not being monetized. So we're not measuring that. One of the things that, again, the challenge for the future is, can we harness that technology to develop jobs that are high-paying jobs, which means giving the workers skills that they don't have through the technology and not being replaced by the technology.
Fascinating discussion. I'm sure we'll continue to discuss this with you. Bill Lee with Citi, thanks so much.
Thanks.
And we'll have more on the job market later in the program. Find out if you live in a state where workers hate their jobs the most.
On Wall Street, the Dow's losing streak is over. Financials and energy stocks helped lift the indexes as oil prices bounced back today. By the closing bell, the blue chip Dow index was up 41 points to 18,355. NASDAQ rose 22. The S&P 500 up 6. As for oil prices, they did rebound today, logging their largest daily gain in 3 weeks, $1.32. The commodity was helped by a surprisingly large drawdown of gasoline stocks.
Despite today's oil price rise, the trend has been in the other direction. Domestic crude has fallen more than 15% in the past month. And with prices hovering right around $40 a barrel once again, many energy companies are facing some familiar challenges. Bob Pisani explains.
With oil back at $40, there's a lot of interest focused on how oil companies are coping with oil staying lower for longer. Now, we're getting a good sense of that because in the last day, 2 large oil companies have reported, Devon Energy and Occidental Petroleum. Now, both avoided making predictions about where oil was going, but both said their production levels were and would continue to be on the high side. Wait a minute, we have an oil glut. Why are they still producing so much oil? Because everyone needs the cash flow. Their spending is exceeding their cash flow, so they've got to get production up as one way out of the problem. Second, they're continuing to cut costs, in part using better fracking technology. And finally, they're continuing to sell assets. Most companies are now forced to acknowledge that many of the oil assets they bought when oil prices were a lot higher will not be profitable in the near future if oil stays in this price range. So they're selling, and when necessary, they're taking charges. The bottom line, it's a long and winding road, but most oil companies are continuing to slowly improve their balance sheets. They're cutting costs, they're paying down debt, they're improving their technology. One key point, many big oil companies are owned for their dividend. Occidental not only said the dividend was safe, they actually raised it slightly. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Now, what happens next to the entire energy sector could depend largely on who is voted into the White House. Jackie DeAngelis has that angle of the story.
A critical time for energy investors, and many are wondering what impact each presidential candidate would have on the energy industry. Hillary Clinton has indicated that she would focus on cleaner energy, modernize U.S. infrastructure, combat climate change. She'll focus on alternatives and give Americans a range of energy options. She says no to Keystone. She also says she wants to revitalize the coal industry, but the perception is she'll phase it out. Donald Trump says his 100-day action plan would reduce our dependence on foreign oil, impose less restriction on drilling, less bureaucracy around energy policy. He'd say yes to Keystone and take a less harsh stance on climate regulation. The perception is Clinton would continue more of the current administration's policies and that her plan would be a more gradual move away from foreign oil. The read on Trump's approach is that energy independence through more drilling might pressure prices as the industry already copes with oversupply conditions. In reality, no one's policies will be implemented overnight, but in terms of stocks, alternatives could see a boost under Clinton. Coal miners would probably do better under Trump.
As far as stability for oil price, I'd have to think Hillary Clinton, because she's pretty much going to have the status quo here. What would happen with Trump would be something pretty much of a wild card. We're not sure even how much we'd go up or down here, but it seems that regulations would be taken off and things could get a little haywire.
The jury is still out on the drillers. Short-term, Hillary Clinton's plan could be more supportive of prices, though earlier this year, oil did get close to $26 a barrel. Longer term, however, Trump's plan could be better for big oil. For Nightly Business Report, I'm Jackie DeAngelis.
In Washington, officials confirmed that the White House secretly arranged a delivery of $400 million in cash to Iran on the same day Iran released 4 American prisoners. But the White House denies it was to pay a ransom.
We have not, we will not pay a ransom to secure the release of U.S. citizens. That's a fact. That is our policy and is one that we have assiduously followed.
Eamon Javers joins us now from Washington. Eamon, this is a very interesting story. What does the administration say this money was actually paying for, and why does it matter whether it was a ransom payment or not?
Well, Tyler, the administration says that this was just an installment on $1.7 billion that the administration had agreed publicly to pay the Iranians. That money was principal and interest of a payment that the pre-revolutionary Iranian government had made to the United States back in 1979 for some arms that were never shipped because the Iranian Revolution happened in between. So that money was stranded in the United States for all these years. The Iranians wanted it back, and then as part of these negotiations ongoing over the past year or so, the United States agreed to pay $1.7 billion. They say the $400 million was just the first payout of that. Now, the reason it matters whether or not this was a ransom payment is because the United States has a strict policy of not paying ransom for hostages. The thought is, if you do that, you put a price on the head of every other American who could be taken hostage in the future. You create a market, in essence, for hostages out there, and then everyone else is going to try to negotiate up from whatever the price was that you set, Tyler.
How was this payment made? I mean, there's also been some question about whether or not the payment was secret or not. Was it?
Yeah, the White House says, look, this was not secret because we publicly said that the $1.7 billion was going to be paid, and explained that to the American people from the White House podium. And that's true. This particular shipment, though, happened in an unmarked aircraft, according to the Wall Street Journal, and was done in non-dollar denominations of physical cash, Swiss francs, euros, and other currency, shipped on pallets to Iran because there's no banking relationship between the United States and Iran to simply wire the money. So all of that makes it seem a lot more murky that this particular payment was being done in secret, although the White House says the overall program was well known.
All right, Eamon, thank you very much. Eamon Javers in Washington tonight.
Still ahead, which athletes are most likely to land Olympic-size endorsements? Goldman Sachs has been ordered to pay more than $36 million to settle allegations that it obtained and used confidential regulatory materials from the Federal Reserve. The bank already paid a $50 million fine to New York State banking regulators for failing to properly supervise its former employee. The former Goldman employee was fired back in 2014. A New York Fed employee was also fired and sentenced in court after pleading guilty to charges.
Tesla reports a wider than expected loss in its second quarter. The electric car maker lost $1.06 a share. That's $293 million. Estimates were for a very meager loss, relatively, of 52 cents a share. Revenue for the quarter also missed estimates, coming in at roughly $1.5 billion. But that was 30% above last year's level. As for the stock, it was little moved in after-hours trading following the results. But the company also made it clear that it is, it says, making progress in increasing production. Phil LeBeau has more on the company's quarter.
The electric car company Tesla reporting a wider than expected loss for the second quarter, but it's the company's outlook for the second half of this year that's getting the most attention from investors. Tesla says it expects to deliver at least 50,000 vehicles in the third and fourth quarter combined, and if that happens, Tesla should hit its full-year delivery guidance of at least 80,000 vehicles. Not much reaction initially after the earnings report. Again, Tesla reporting a greater than expected loss in the second quarter. Phil LeBeau, Nightly Business Report, Chicago.
Stronger ad sales helped 21st Century top earnings estimates. And that's where we begin tonight's Market Focus. The media company also showed higher affiliate revenue, but still not enough to beat sales estimates. Fox is also hiking its annual dividend and launching a $3 billion share buyback. Shares were initially lower in extended hours following the results, but ended the regular session up 1% to $27.04. Mobile payment company Square posted a narrower than expected loss thanks to an uptick in sellers. The revenue also was higher than expected, and the company gave revenue guidance for the current quarter that was in line with estimates. Shares initially popped after hours, adding on to the regular session's nearly 4% gain. Shares closing at $10.44. Time Warner posted disappointing sales as currency headwinds and lower television licensing revenue hurt results. But the media giant did top profit estimates thanks to higher subscriptions at the company's HBO network. Time Warner also said it took a 10% stake in video streaming company Hulu. Shares up 2% to $77.83. And Clorox's profit fell in its latest quarter due to higher spending on marketing and production innovation, missing targets. But the consumer products company maker did post better than expected revenue and gave an upbeat earnings outlook for the year. Shares were up nearly 1% to $131.59.
Humana's quarterly profit fell 28%, with the health insurer citing losses tied to its Affordable Care Act plans. Even so, those results were ahead of estimates. Revenue also better than expected. The company also reiterated that it will end the majority of its plans tied to those public exchanges next year. Shares up 2% at $173.48. The shoemaker Crocs missed expectations, citing a challenging global retail environment. Crocs' guidance for the current quarter also came in below estimates, and the company said revenue for the year going to be down in the low single digits. Shares plunged 23% to $8.44. And Fiat Chrysler may be exploring a sale of its auto parts maker Magneti Marelli. This, according to a Bloomberg report. It says the electronics company Samsung is in advanced talks with Fiat to potentially buy some or all of the operations tied to that unit. The deal could be valued at more than $3 billion, and that sent shares of Fiat Chrysler up nearly 9% to $6.62. And Walmart is reportedly interested in buying the online discount company Jet.com. Wall Street Journal says a potential deal could be worth up to $3 billion. Walmart declined comment. Walmart shares off 19 cents today to $72.94.
Friday marks the official kickoff to the 2016 Summer Olympics in Brazil, where more than 11,000 athletes from all over the world will come together to compete for gold. And if they're lucky enough, a select few could land big endorsement deals to go along with their medals. Dean Crutchfield, branding expert of his own firm, the Dean Crutchfield Company, now joins us to talk about this. And Dean, what does it really take for an athlete to be a candidate for an endorsement? Do you have to be only the number one or number two in your sport? Number five, could they get an endorsement deal too?
I say absolutely. It's really a question of the personality and the profile and how it matches the brand. Your brand's not just about marketing, advertising. It's about who you are. So who reflects your brand the best? That doesn't mean they're the number one player.
Do most, Dean, of the companies that might be attracted to finding an endorser, do they already know who they're going to go after? Are the stars almost preordained?
You've always got the talent spotters that are looking at that, the bank of athletes that are playing. And there's always those few that really stand out. I mean, I think that there's Simone Biles or Elijah Wilson or Tom Shields, the swimmer, are definite hot picks for U.S. Top athletes that likely could get great sponsorship deals because of the qualities they bring to the sport.
What about if there's a breakout star, someone that we really don't know their name yet, but once we start to see the video and we see them play and then they do well, they're going to be the breakout star? What happens with the endorsements there? Are companies lining up? Are they right there on site ready to sign them?
Well, they're very sophisticated. They've got their feelers out there. Brands love endorsements and customers love celebrities. So it's a very important, big part of business and a very successful aspect of marketing. So they're on the lookout for any talent that they can find.
Anyone whose story captures the imagination, I assume, of the viewing public would be the people they would go after. We know some of the stars, the Michael Phelps, the swimmer, Usain Bolt, Serena Williams, and so forth. But do most Olympic competitors make any money?
No, most of them don't. I think it's the same. If you look at a lot of trades, a lot of professions, not everybody's making the big bucks. It's just the small few. And those small few in the States, really, if you think about Serena and you think about Sharapova, there's a lot of overexposure with that current talent base. So there's a real demand for new talent, for new standout stars to take on these brands and refresh their sense of who they are to the market.
And quickly, Dean, what about rebranding someone who may fall into some problems if there's a doping scandal, if there's some other type of scandal with one of these athletes? How then do the companies recover, and how do they distance themselves from the athletes?
Well, basically, they say never trust an animal. It doesn't matter how many legs it's got. These things can go wrong. And there is the morality clause, but that's after the fact. It's very difficult to control a personality, whether they're an actor or a sports person, as we've seen in so many cases.
Thank you so much, Dean. Dean Crutchfield with the Dean Crutchfield Company.
Thank you.
Coming up, you can run, but you can't hide, at least not on social media. And now some very big companies are listening in to your online conversations. I'm not kidding. Next time you're at a restaurant or even a ball game on vacation, the company that owns the venue you are patronizing may be monitoring your public social media posts, not your emails or your texts, but your non-private Facebook or Instagram or Twitter posts. The growing use of a technology called geofencing is making it easier, much easier for companies, including some of the world's biggest, to see what their customers are talking about in real time while they're on property. The goal is to engage with them, increase awareness of their brand, and then hopefully boost sales. Michelle Caruso-Cabrera has our story.
At Marriott's corporate headquarters in Maryland, they call this glass-enclosed room M Live. It's a modern-day command center for the hotel chain where employees constantly monitor social media platforms such as Instagram, Twitter, Facebook, and YouTube. Every day, more than 300,000 guests post on social media from a Marriott property. Executives know this because of a technology called geofencing.
Each yellow dot's a hotel or a location.
Marriott has geofenced more than 4,000 properties worldwide.
That means basically in the area around a hotel, the conversations that are on social media, we can tell who's geographically around that hotel.
And they watch as guests post about everything, from breakfast in bed in Amsterdam to pool selfies in the Caribbean. Sometimes Marriott reposts them using their account, and sometimes they reach out to the customers directly.
So when a guest posts about a special occasion, for example, like a birthday or an engagement, the team here can notify the manager of the hotel, and that guest can get a special something, like a bottle of champagne or perhaps a free appetizer at dinner, maybe a room upgrade.
It's designed to make the customer feel special, not spied on.
The idea that you can see what people are posting within a geographic area, do you worry that that creeps out your customers?
We think that the people who are actually on social media are delighted at the ability to have us amplify their conversation.
The CEO of the company behind this platform, Hyper, says investors frequently ask about privacy concerns. He's quick with a response.
Our partners are only engaging and interacting with people that have shared their content publicly. Marriott are using Hyper to surprise and delight their guests, not to try to sell them something, but to try to elevate their experience.
It's really about a personal relationship that we're having with our customer.
For Nightly Business Report, I'm Michelle Caruso-Cabrera, Bethesda, Maryland.
And if you don't like that, you can turn off location services on your phone. To read more about how your social media posts are being watched by some Fortune 500 companies, head to our website, nbr.com.
Here's another way that you're being tracked. You may want to know what you think about your job, and a lot of people want to determine where people are most miserable and where they're most happy. Well, Eric Chemi is with us, and he has done some research. There's some findings out there about where people are most happy about their jobs. What have you found?
It's really interesting research, so I like to look at the bottom of the list. Where are people the most unhappy? Where do they hate their job the most? And Delaware is number one on the list. They're a small state. Number two is Connecticut, and they are a major metropolitan place. When you think about the big companies that are there, there's the entire list, the bottom of the list at least, Florida, Louisiana, Maryland. So a lot of East Coast states there talking about on social media how they don't like their jobs.
What's the matter with Connecticut and Delaware? Connecticut has a high personal income.
Connecticut, high taxes. Think about GE. They're leaving the state to go to Massachusetts. ESPN, big layoffs. Finance people, hedge funds, Wall Street people, not getting the kind of bonuses they're used to. Salaries are going down, layoffs happening there. So Connecticut's got a lot of things going against them, and they're talking
Delaware?
about it.
Delaware's so little.
Small states often can skew one way or the other because they're small. It's really easy to move the needle, whereas you won't see big states on the extremes. But that's what makes Connecticut so interesting.
What are they looking at when they determine what's job happiness. What does that really mean? What are the trends out there?
So Monster, obviously we know Monster.com and Brandwatch, they track social media. They're looking at how people are behaving on social media. What are they saying? They look at words like hate, love, like, all that kind of stuff. Very sophisticated algorithms to see what people are saying. They know where they live and kind of figure out a lot of patterns there.
So they're actually saying, I hate my job somewhere.
Somewhere. Like maybe one of you might have a bad day and say, not a great day at work today. That's going to get picked up on a tweet, and they're going to put this in the data.
They should be happy they have a job. No, I'm just kidding. Where are workers happiest? Which states?
Generally in the West. So when you look at states like Idaho, North Dakota, Montana, Washington's just short of the top 5, but there's this northern and western bias towards people that are happy, maybe because it's less dense, there's more greenery. Not exactly sure why, but a lot of tech and tourism have been what's driving the positive sentiment on the western side of the country.
Very interesting. Got to always focus on the positive, though, I think, and be happy, like Tyler said, you have a job.
Be careful. People are paying attention to this stuff.
Absolutely.
All right, Eric.
All right, Eric, thank you so much.
And finally tonight, for the first time ever, a private company has been granted permission for an unmanned mission to the moon. Florida-based Moon Express, there it is, looks like a little drone, doesn't it? Used to deliver wine. Got the go-ahead from the FAA to put a robotic lander on the moon next year. The lander is not yet completed, but it is expected to carry science experiments and some commercial cargo on the one-way trip. Don't know who they're delivering it to. The CEO of the Moon Express calls this a milestone, folks. The companies have been active in the space industry for some time. They're limited to stay within the Earth's orbit.
All righty, well, that is Nightly Business Report for tonight. I'm Sharon Epperson. Thanks so much for watching.
I'm Tyler Matheson. Have a great evening.